Hello traders, it's Samurai Trader here. Welcome to this training session. It's not going to be a long recording, but I wanted to answer a number of questions that I receive almost daily about trading divergence, which is of course also known as counter trend trading. It's something that virtually every trader wants to do, is pick bottoms and pick tops and jump on divergence trading, but it's also an area of it makes it very easy to lose money, and I'm going to really show you the right way and the wrong way of trading divergence. So with that being said, a couple of things I want to cover before we get underway. First of all, I need to of course put up the risk disclaimer. There is a risk in trading. If you haven't watched one of my recordings or read my risk disclaimers, let me get this out right. Risk disclaimer, please take the time in reading the disclaimer. Also, we will be going to some charts in a moment. So bottom right hand corner, if you click on that, you'll be able to go to full screen. So I'm going to be covering how to trade divergence. I'll be giving you a whole lot of tips and ideas. So I'd recommend, if you've got a notebook handy and a pen, it'll just make it a little easier. But before we do get underway with talking about the trade itself, I just want to give a very quick advertisement. First of all, if you haven't subscribed to my YouTube channel, please do. If you haven't got my free ebooks, I now have an ebook on mastering day trading, the truth about day trading. So I've got a couple of ebooks. You can go straight to my website to request those. And very important is that my program, the Day Traders Fast Track program, I now provide indicators for TradeStation, NinjaTrader 7, NinjaTrader 8, MT4 or Thinkorswim are all included within the 197. There is no upsell. You're not going to get a telephone call from a telemarketer, etc. But I want to make a very important announcement, and for new members or even current members watching this, you'll also be included. Just drop me an email and we'll make sure you get the passes for this. Now, new traders suffer from what I call confused knowledge. That is, you get bombarded. There's so much information out there about day trading. We're always studying, reading. That is the most, I suppose, those traders that with a passion for trading are always studying ideas and strategies, but they get very confused. But also, when you invest in the Day Traders Fast Track program, that also can be a common problem. That is, in my program, as you're aware, or if you're not aware, you're about to find out, there are dozens of videos in my program, and I want to truly fast track your success as a trader. So what I'm now doing for every new member that purchases the Day Traders Fast Track program, I'm now presenting, either myself or John, 4 live 1-hour webinars over 2 weeks where you can watch and listen as we explain in detail our trade setups, because traders, we have the world's best strategies, and I promise you that, because I've been researching this business for years. So what I'm now doing is presenting over 2 weeks 4 live webinars where you're able to log in, watch, listen, and ask questions. That is, you can't talk back to us because we're presenting the webinar, but you can type in the chat box your questions. What this means to you is we can truly fast track you and put you on the fast track with my most popular setups. Now, in my program, this is just a short list. There are now over 200 videos. Now, don't feel overwhelmed, but this is where a lot of traders do initially feel overwhelmed. So the purpose of the 4 1-hours is to put you on the fast track to say, okay, here are our top setups. Here are the top 4 or 5 setups to focus on. Here's how they work. You can type in questions as much as they're already covered in videos. Just allows you to get to them very quickly and makes life a lot easier. And we're going to be covering things such as what are the right which trading platforms do you use, what time frames, which markets, and a whole lot more over 4 live sessions. We'll also be discussing my Google Drive, and this is an old shot here, but we've got basically dozens of ebooks uploaded, charts, recordings, PowerPoints. I mean, traders, it truly is the world's most comprehensive program for active day and swing traders. That's all involved. That's all included in the Day Traders Fast Track program, which is only $197, and you get the live webinars. So that's the end of the ad. So let's now get into it. One last thing I've got to say: these sessions are for both very educational. They're learn to trade sessions. They're for beginners, intermediate, and advanced traders. So over 70% of my traders that work with me are advanced traders. The whole idea, traders, are that in at least 2 of those sessions we spend the whole time just going through live examples of the setup. So it's really designed to fast track you. Now let's now get to trading divergence. Now with traders, one of the greatest challenges with traders is that we want to be hunters. We want to go and hunt the setup. Well, trading divergence, we need to wait for it to come to us, and you need to be very picky. You need to be very patient. You need to be what I call a sniper. A sniper lays in wait, and it's very easy to be what I call smashed or hammered when you trade divergence. So I want to run through some examples, but here's a couple of things I'd like you to write down. Now I'm not going to turn this into a great big session. This is covered very comprehensively in my program, but please write this down. Number one, do you have angulation? And I'm going to cover that in a moment, but I want you to write these down. Do you have a bubble? Please write that down. Do I have a bubble? So do I have angulation? Do I have a bubble? Do I have a pivot bounce? Number 4, have I got room to move to the major EMAs? And you'll see that in a moment. Am I in a channel? Now we know that when you're trading channels, you want to sell the highs, buy the lows. But if you're in a channel, traders, it's very easy to be hammered if you're divergence trading. Now the other thing is, now do I have 2 hills? And I'll explain what that is in a moment. So first of all, traders, a T7 is a double top or double bottom. When you have a double top or double bottom with the trend or counter trend, there really adds to the chances of your trade coming off, as you're about to see. So we have in our program, we've really got 3 main setups when we're counter trend trading: the T3, the T19, and the T89, and all of that really is combined with divergence. And as we go through this, I'll show you some examples. The greater the angulation, that is, the steeper you see price action moving away from your EMAs, from the major EMAs, the better the chances of your trade coming off. Now what I'm about to show you here works on all markets and basically all time frames. Now please remember that for lower of a time frame, you do have what I call more noise. You will have more false signals. However, of course, as day traders, we use lower time frames. Now in this particular example we're looking at the NQ 144 tick chart. So we're looking at the NQ 144. So what we're going to do is quickly draw up some trend lines. So what we can see is a big sell-off here. Now in our courses we call this a T3. All right, when you get a big drop like this. And what I like to do here is, and it's not exactly on the bottom, is I always like to have my stop 2 ticks below a swing low, or above, if that was a swing high, above there or below. Now in this particular case I'm not going to measure it, so it doesn't really matter, but what we've got here is a fall away for a T3. It then failed as a direct follow through, and then we form what we call a double bottom. Now a double bottom or double top, by the way, and here's a little double top here, can be within 2 ticks. Walks like a duck, acts like a duck, quacks like a duck, it's a duck. Okay, so if it's within 2 ticks, it's a double top. So we've got a double bottom formation, and this is what we've got. We've got divergence here on our MACD. So we can see we've got divergence and we've got a double bottom. All right, this is a big tick towards your trade coming off. And you also have what I call angulation. So what exactly is angulation? Angulation is when you see price action moving well away. You've got an angle, price action has moved away at an angle from your major EMAs. Okay, now the next thing, when you do have your entry, you want to be checking out how much distance do I have to my major EMAs, right? Because the further away from your major EMAs, that is, the greater the angle, the greater the profit potential, and the more likely you are to have what I call follow through. So you've got divergence here. We've got plenty of room here to the majors, which are up here, my 89 and my 200. I've got plenty of room. So that really ticks all the boxes as a a counter trend or a divergence trade. But one thing I did want to mention here is this. Notice here that I now have divergence in the direction of my higher time frame. Now we want to ignore the first one because what I mentioned earlier, what I call two hills. Two hills, so this is one hill and this is two hills. So it's just a term I've coined over the years. One hill goes down and forms another hill. So in this particular case, we can see here that we've got a higher high on price and we have a lower high on our divergence indicator. So we actually could have entered up at this point here. However, one thing you want to be aware of, when you have really deep pullbacks to your 200, quite often a lot of these change trend direction. Now in this particular case, you actually it actually paid off for a few ticks, bounced up and then formed a nice little T7, a little double top there. Then it fell away very nicely. Thank you very much. Now we then had price fell away and we have divergence setting up again. Now my divergence indicator is very sensitive and you can see here I've got two little hills. So we can see here price come down, pulled up, we had a bit of a bounce, then it fell away again and we had two hills form. We actually have an entry right there. Once we close above our EMA, or what I call the trigger line, we have an entry. Then we went up there and we bounced off the major EMA. So you had probably about 8 to 10 ticks of profit potential, immediate profit potential there before you bounced. Now what we then had was form was a T7, a nice little double bottom. So yes, you've got a bit of a tail here, but that doesn't matter. So price actions come up, come down, and if we draw it across here, this is what I call a big picture divergence. So you've now formed, and sorry it's not exactly square, it doesn't matter, but it's come down and I'm waiting for a close. And if you want to really confirm the trade, you want to wait for a close above the trigger line, which is right there. So here are a couple of examples. So one, let me just go back to some of the rules. Do I have angulation? And you can see price is steeply angled away from the major EMAs. This is what I also call a bubble. So angulation, and just that bubble, just it looks like a bubble. It does to me anyway. That's why I call it a bubble formation. Do I have a pivot bounce? Now if you're trading with floor pivots, you'll quite often see divergence trades that pay off really well that come off pivots. That adds an extra, probably a 10% addition to your trade coming off successfully. So watch for divergence trades against major EMAs or against pivots. The next question I had there, do I have room to move to the EMAs? Now if you're trading multiple contracts, you may choose to then pull half of them off there, maybe let the rest run. You had a decent pullback, your stop should have been somewhere down here, and then it took off to the upside. So remember that usually you'll get a bounce as we did over here, and we did here, and we did here on the major EMAs. Do you have two hills? Well, it's very hard to see, but you actually had a little two hill there. Not a perfect setup here. You've definitely got two hills. Let me just show you a couple of other examples perhaps. Okay, here we've got an example where you've got it angling away. It's not perfect, but you do definitely have a high on price. So very important here that you can see here that our MACD is sloping down. We've got our high on price. Now I mentioned earlier channels. This is where you've got to be very careful that that you've got definite angulation and bubbles, because what will happen in a very strong trend, you'll get these divergence indications setting up, that is divergence on your MACD, etc., but price just pulls back and continues. Price pulls back then continues. So you've got to make sure that you don't, or you're not trading in a channel. So what we've got, let me just show you one more example here. You can see here that we've got two hills, 1, 2. We've got a lower low. Our entry is on the close above the trigger line. We've come up here, we've had a turn, then we had another divergence trade set up. Not great divergence in this sense, but we did have lower price. Very rarely is it exactly perfect, traders, but we can see here we would have entered our trade over the trigger line and away we go. So it doesn't matter if I had have told you this was CL or this was the ES or this was a major stock. You go back and you'd accept it because the formations are basically exactly the same on every market. Now what I recommend traders is that you go back and you spend time and you mark up 100 divergence trades on your favorite market, whether you're a day trader or whether you're more of a swing trader. Divergence trading works, but you've got to be very picky with your entries. That is, you definitely want to meet those rules. Angulation, the bubble, you want to have room to move to the major EMAs. You want to make sure that you're not in a tight channel. Very important. So thank you traders. I hope there's some ideas here. Just remember now, with my Day Traders Fast Track program of 4 live webinars, and also of course you can join our educational live trading room that runs from 7:30 a.m. Eastern Standard Time through to midday Eastern Standard Time. So thank you very much traders, and I'll see you on my next recording. Please subscribe and go and request my ebooks.